Hey everyone, welcome to another episode of ADMAIL. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hi everyone, Adam Bergman here, tax attorney and founder of IRA Financial. Welcome to another episode of ADMAIL. Today's title for the podcast, Real Estate Number 5. This is the 5th installment of a series of ADMAIL podcasts on the topic of using an IRA, or specifically a self-directed IRA to buy real estate. So just some record keeping, or housekeeping, I should say. I want everyone to know that you can certainly go back to the 4 previous ADMAIL episodes at your leisure and listen to them or watch them on YouTube. If you have more interest in learning about how to use an IRA to buy real estate, you're going to, I think, dive deep in some really interesting topics, some really, I think, motivational tax strategies and very informative questions from your peers that I think will help you better understand how to use a self-directed IRA to buy real estate and some of the machinations involved. So without further ado, let's get started. First question is from Amir Y. Amir wants to know, I own a home in my self-directed IRA and now have a deal to sell it. I only own the home under 3 months. Will I still be exempt from tax? So the great answer, Amir, yeah. Once your IRA owns it, whether it's for a minute, a day, a week, a month, a year, 10 years, 50 years, 100 years, the income and gains from the IRA generally will go back to the IRA without tax. So there's no concept of long-term capital gains or short-term capital gains, holding period basis. Irrelevant. Throw it out the window. Don't worry. So yes, even though you own the asset 3 months, you can turn around, sell that home, and all the gains or income would flow back into the IRA without tax. You don't have to worry about ordinary income tax, short-term capital gains, or long-term capital gains. It would flow back the IRA without tax, which is one of the main reasons why 65 million plus Americans have invested over $13 trillion in investments in an IRA, because of the concept of deferral, compound returns. Your money doubles every 8 years, assuming a 9% rate of return. Your money's going to grow faster without tax. And that's the beauty, Amir, of using an IRA to buy real estate. So great question. Second question from Madeline F. Madeline wants to know, I have a self-directed IRA LLC that owns a house. I own it in a pre-tax IRA, but want to convert the house to Roth. Do I have to sell the house to my Roth? So a superb question, Madeline. Thanks, Barry, for including this one. I get this question a lot. Thankfully, no. You actually can't sell the assets yourself. That'd be a prohibited transaction. So the way you would just convert an asset to Roth is paperwork. So if it's in the LLC, let's say the LLC is called ABC LLC, and owns the house, and ABC LLC is owned 100% by your IRA. So in order to simply have a Roth IRA be treated as the owner, we would amend your operating agreement and just literally switch the Exhibit A, the cap table, to show the Roth as the owner. Literally 1 second, it's done. But here's the heavy part. We would 1099-R you for the value of that home. You'd provide us the value. And that's when you'd have to include that on your 1040 tax return, the value of the home that you're converting from pre-tax to Roth. So you got to do the tough stuff, which is pay the tax. From a IRA custodian standpoint, it's super easy. We're just going to amend the operating agreement, because in the case of the LLC, the IRA is the owner. So we don't need to do anything with the LLC. The LLC is still going to own the house. Title of the house will still remain in the name of the LLC. LLC still owns it. We're just changing the shareholder or the member from the IRA to a Roth. That's it. So on the part of the custodian, super, super simple and easy. Couple seconds. The hard part, the heavy lift, is you got to pay the tax on the amount of the conversion. So great question, Madeline. And the third and final question of today's episode is from Lawrence M. Lawrence wants to know, I have a real estate investment in a fund I own in a self-directed IRA, but just heard about the checkbook IRA LLC option. Can I move the investment in the LLC? Thanks. You certainly can. So this happens a lot. You, for whatever reason, wanted to just make the investment using the IRA as the owner. So title of the investment would be IRA Financial Trust Company for the benefit of Lawrence M. IRA. And now, sometime later, you watch one of my videos or read a blog, read my book, and then wake up and say, wow, the LLC is pretty cool. Get more privacy. I get limited liability protection, checkbook control. I like it. I want to do it. Can I do it? Sure. You can do almost anything you want when you're a client of IRA Financial. We'll make it happen. So what happens here? We will set up the LLC, call the state, you'll be the manager, we'll take care of the EIN, we'll get the LLC, we'll get the bank account open. Then what we will do is we will complete a contribution agreement that will basically, from a partnership tax perspective, tax-free contribution of the asset in return for LLC units. So the LLC will now own the investment and the IRA will now own the LLC. Okay. And what you would need to do is simply tell the investment fund manager that you're assigning your interest to a related entity. We'd provide all the LLC info, the EIN, and the manager of the investment would just simply change the investor info on their record for their side for K1 purposes. And because it's an affiliated entity, there's no tax. They'll just literally paperwork it. Going forward, there's probably a document you're going to need to sign affecting that assignment. We'll take care of the LLC. Title of the investment will be changed from the IRA to the LLC. And we'll take care of the contribution agreement to allow you and your IRA to contribute the investment paperwork to the LLC in return for units. So the IRA who owns the asset will now own the LLC, which owns the asset. And the promoter of the investment will just need to change the title on their end. So for future partnership reporting purposes, they have all the most accurate information. From a tax standpoint, it's a tax nothing, doesn't matter, doesn't create any tax event because you're just doing a tax-free contribution of the investment in return for units, no cash, no boot. So you're good to go. So thank you, Lawrence. Thanks, Madeline. Thanks, Amir. Thank you all for listening. If you're watching on YouTube, I hope you enjoy the channel. Feel free to subscribe. If you don't mind, please leave a review, hopefully a positive review, a thumbs up. The more reviews, the more positive feedback we get. The algorithms do their thing and more people get to listen to the video or listen to the podcast. And if you're doing this on YouTube, more people get to watch the video, which again is good, right? I'm doing this for all you guys and myself. I like doing this stuff, but we all learn from each other. They're great questions and make us better, smarter, and richer investors. So nothing like learning from the Self-Directed IRA Nation. We're growing, we're strong, we're fast, we're smart, and we don't mess around. So I keep these podcasts short, sweet, get you the answers right to the point so you can move on with your day, but still have the knowledge you need to become a better and richer self-directed investor. So thanks again. Appreciate you guys hanging out with me today. I hope you enjoyed the podcast, and I will see everyone again next week. Take care.